The mood of the market looks gloomy as the equity benchmarks have lost about 4% during the last 6 consecutive sessions, and the hopes are pinned upon the second quarter earnings season for positive triggers. Let's do a 3-point analysis to find out what brokerage houses are expecting from Q2 earnings. 1. Q2 earnings may not be very encouraging. Well, Edelweiss Securities has told Moneycontrol that they expect a cumulative revenue to decline by about 3%, while the profit may decline by about 6% in Q2 FY20. Now, this is a sharp moderation from mid-teens growth seen in FY19 and 7 to 8% growth seen in Q1. In fact, Edelweiss has also indicated that Q2 top-line growth of most sectors that they cover, excluding banks and commodities, is likely to be the lowest in a decade. Now, Kotak Securities too expects softer numbers this time. The brokerage house expects profit before tax of the BSE 30 index to decline by about 1.4% year-on-year, and that of Nifty to decline by about 4.4% on a year-on-year basis. Now, on the other hand, brokerage firm Prabhudas Leeladhar also estimates an increase of about 6% in profit before tax for Q2 under its coverage of universe that it does. 2. How are various sectors expected to post Q2 results? Well, Edelweiss Securities sees a good growth rate of over 15% for the oil and marketing companies, cement as well as retail banks. But IT and industrials, whose profit growth has slowed significantly, may see a marginal growth of 0 to 5%. Now, Kotak Securities also expects decline in profit before tax in automobiles due to the lower sales volumes and margin compression due to increase in discounts. For metals and mining sectors, sluggish demand, weak realizations and volumes are likely to hit earnings, and telecom companies will continue to feel the impact of seasonal weakness. However, the brokerage house expects a strong year-on-year growth in profit before tax for banks led by Axis Bank, ICICI Bank and SBI. Now, diversified financials may see a steady operating performance aided by a decline in marginal cost of funds for large players, and also for pharmaceuticals it is likely to be a strong quarter for the domestic formulation segment. Also, sectors like agriculture, aviation and media, they are likely to post good results and also good sales as per Kotak Securities. 3. What are the factors then weighing on Q2 earnings, and how should investors play the earnings season going forward? Well, RBI's recent downward revision of the GDP growth to 5.3% from earlier 5.8 to 6.6% in H1 FY20 says it all. The slowdown impact is deep, and the corporate profit growth estimates have not gone up despite the tax cuts which have been announced by the government. Now, experts also suggest the impact of rate cuts, good monsoon, along with other measures taken by the government is likely to push the demand-led consumption for H2 FY20 and for FY21. Now, as part of the hit in Q2 is also likely to be on account of a one-time markdown of deferred tax assets of corporate banks. Now, overall earnings momentum is still soft. MarketSmith founder William J. O'Neill also says that investors must concentrate on stocks with proven records of significant earnings growth in each of the last 3 years, plus strong recent quarterly improvements as well. Experts also say that one must avoid taking new positions in a stock if the earnings report is due in a week or so. Overall, the earnings season for Q2 FY20 is unlikely to throw any surprises and may not enthuse the markets. One cannot rule out the near-term volatility. However, brokerage houses do retain their long-term record high targets for the Nifty.